Hello and welcome to class number 8 of this quick revision series for Prelims 2024, which is going to be held on the 16th of June. I really hope that all of you are enjoying and learning from this new series. We have already had 7 classes. In case you have missed any one of those, I'm giving the link of the entire playlist in the description of the video. Go through that and you would be able to revise. Also, in order to get the PDF of all these lectures, join the Telegram channel. The link of the channel is in the description of this video. In today's class, we'll be discussing topics mainly from Indian economy and from agriculture. Now, agriculture is, as you know, a part of GS3 only. So we have taken up mix and match of the topics. So mostly is basically GS3, Indian economy mostly, and then a few topics from agriculture as well. We'll continue with economics in the next 2 classes also after this. Topic number 86, we have already completed 85 so far. There is something called the Gresham's law that was in the news. Now, what is Gresham's law? The simple idea of Gresham's law or one line statement is bad money drives out the good money. What do you mean by this? Basically, in simple terms, if there are, let's say, 2 currencies that are running in the country and one of the currencies is undervalued, that is a good currency, one of the currencies is overvalued, then what happens is the good currency will be taken out of the market, only bad currency will remain. I'll give you an example. So let's assume, if you remember, when you read about the Delhi Sultanate, there was a time period that token currency was introduced, that copper coins were introduced. Now, before that, the coins that we had would contain the amount of gold in them, which was equal to their value. Now, when the rulers thought it would be a good idea to introduce a token currency, to introduce copper, what happened? People started hoarding the good currency. People started hoarding the gold and silver, and they started to use that bad currency. So bad currency basically circulates in the market and good currency drives out. This is something which is described by Gresham's law. In today's time, how do we see this? In today's time, basically, it is seen that whenever central bank of a nation intervenes and artificially decides the exchange rate of that country with respect to, let's say, the US dollar or international currencies, that is when we have the bad currency which drives out the good currency. So in Sri Lanka, we had a situation where the Central Bank of Sri Lanka fixed the exchange rate of Sri Lankan rupee against the US dollar. When you do not allow your currency to find its true value with the market forces, as a result, what happens? The good money, that is the American dollar, will be driven out of the market, and the bad money, which does not have a lot of value right now, Sri Lankan rupee, will be flooded in the market. This is called the Gresham's law. So when you have 2 commodities or 2 currencies, both of them recognized by the government, higher value commodity will be taken out of the circulation because people think that we will preserve it, we will save it with ourselves for future times, and we will rather use the bad currency right now because everyone is accepting that. That is called the Gresham's law. So the idea is that we have to allow our national currency to float freely, to find its true value with respect to dollar or pound or euro. We have to let go of the exchange rate. We cannot artificially control it. It applies to paper as well as commodity currencies and other goods also in the market. That is the concept of Gresham's law. Second big news for the day is RBI's instructions to the bank to move away from Libor. Libor is London Interbank Offered Rate. What exactly is this? So basically, banks around the world, when they need short-term loan, so for example, let's say there is a bank which has a lot of money, but they have given out most of the money in the form of loans. So if someone comes to have a big withdrawal from the bank, they need cash for a short duration. So banks take loan from some other banks for a very short tenure. The exchange rate that is charged for interbank loan, interbank transaction, that exchange rate or that rate of interest rather is called Libor, London Interbank Offered Rate. The RBI has now asked Indian banks and regulated entities to move away from this Libor, and there's one more rate called Mumbai Interbank Forward Outright Rate. RBI wants us to move away from this and move towards something called secured overnight financing rate. Why? RBI thinks that the way in which the London rate is decided, we don't have any control over it. There are only a few currencies that decide how this rate will be. And there are only a few banks in the world that have a sizable presence in London that decide how this rate will be determined. And we are not happy with that. So how is it decided? Let's see that as well. As I told you, Libor is a short-term interest rate that banks charge from each other. It also gives an indication of how healthy the financial market is right now, how easily the money is available all around the world in between different banks. It is a basis for which consumer loans around the world are also given mainly from financial institutions. Now, how is it decided? Do remember that this is decided by 5 currencies with 7 different maturities. What are these 5 currencies? The Swiss franc, euro, pound sterling, Japanese yen and the US dollar. Do remember, these are the 5 currencies that determine what will be the Libor. It is administered by 11 to 18 banks. Usually only those banks that have a sizable presence in the London market are eligible to be a part of this esteemed closed group that will decide the Libor. And this is why RBI is not happy about how the rate is decided for Libor. Also, there are different rates for different currencies. So what usually happens? These different rates are arranged in the descending order, and the arithmetic mean of this data is taken out after removing both top and bottom quartiles. Now, what are both top and bottom quartiles? Basically, without going into detail, let me explain this to you in simple terms. Let's assume there is a class which where marks of students are something like this. First got 10 marks, then 12 marks, 15 marks, then someone got 90 marks, then 99 marks, 95 marks, and then someone got, let's say, 5 marks, 7 marks, 10, 11. These are the marks of the different students. Now, if you ask what are the average marks will go higher because of presence of these 3 students only, right? But the reality is that the class performance is not that great. So, either in order to get a better idea, what do you do? Rather than taking out the average, you remove the top quarter and the bottom quarter numbers. So, if you arrange them in ascending or descending order, at the top, whatever are the 1/4 observations, remove those. At the bottom, 1/4 observations, remove them. In the middle, what you get? Then take an average out of that. So, basically, that is how usually you get this formula. However, again, this is not a true representation because you have to first arrange them in an ascending or descending order. Only then you will be removing the top and the bottom quartiles. Anyways, so you don't have to go into detail of the entire process of it. The calculation will not be asked. Just remember how 5 currencies, or which are the 5 currencies that are used, what is Libor and how does it work. Then what is Mumbai interbank forward outright rate? The rate that RBI again wants the banks to not use. This is based on Libor only. Just that Indian banks basically add to that some of the premium that is because of the Indian forex market. So the Indian forex market, depending upon whatever the rate of dollar or pound is right now, based on that usually there is a slight premium that is added, and that becomes the Mumbai interbank forward outright rate. The MIFOR is currently published by Financial Benchmark India Private Limited, FBIL. Next important news, the Government of India recently in the budget announced a new scheme called Mahila Samman Savings Certificates Scheme. What exactly is this? This is a small savings scheme. The idea is that the government wants women across the country to become a part of financial inclusion, to have their savings deposited in post offices so that their financial inclusion can be accelerated across the entire country. So basically, all the public sector banks and some private sector banks have been given the permission to implement this Mahila Samman Savings Certificate. Under this scheme, you can deposit up to 2 lakh rupees in the name of women or girls for a tenure of 2 years only. There is a rate of interest that is 7.5%. It is much higher than the savings bank account rate of interest. You will not get any tax benefit, so they will be tax deducted from whatever interest that you get. Also, partial withdrawal is allowed in the scheme. In between 2 years, if you want to withdraw some money, you can. It is only a one-time scheme announced in budget of 2023, and it will again only be valid for 2 years of time period. Do remember that this is a scheme that is mainly being implemented for women financial inclusion. It was the post offices that were first targeted or that were first given the responsibility to implement this. Now, public sector banks and some private sector banks also have been given this option. 40% of the eligible balance can be withdrawn after expiry of 1 year. If you want money, you can take this out as well. There is premature closure also that is allowed. So if you don't want to wait for 2 years, you want the money, you can close the account in between. In that case, the rate of interest that you will get is 5.5%. You can stop this scheme after 6 months if you want to. Next important news, the RBI is very concerned about unclaimed deposits. What are unclaimed deposits? So there are a lot of bank accounts in India that collectively have thousands of crores of rupees where people for many years have not claimed that money. Either people have passed away, or maybe they have forgotten that they have this money, or they have forgotten the details. Something might have happened because of which that becomes unclaimed money. So RBI wants the people to get that money, to claim that money, for which the RBI has launched the Udgam portal. Udgam portal makes it much easier for the people to register with their PAN and Aadhaar, etc., and find out if they have some inoperative account in any bank. This Udgam stands for Unclaimed Deposit Gateway to Access Information, developed by the RBI, main specifically by the RBI Technology Private Limited and Indian Financial Technology and Allied Services. All the banks will be participating in this portal, and they will help upload all that information so that at one single portal, the user is able to find out whether they have some unclaimed deposit in any bank rather than going to multiple banks. So if you don't know, if you have some, let's say, deposit in PNB, SBI, ICICI, you don't remember, many years have passed, you just go to one single portal and they will give you details of all the bank accounts where you have some unclaimed money. Consumers can register on this with their mobile number, then they can search for their deposits using their name, PAN card, voter ID, any of these would be able to work. You can retrieve your deposit by completing the KYC process with their branch. In case the holder of the bank account has passed away, then their nominee can come in, but they have to submit the documents, death certificate, and also proving the relation that you have with the nominee. The RBI has also defined what will be called unclaimed deposits. So basically any funds in savings or current account that has remained inactive for 10 years, that will be called an unclaimed deposit. Or if any money has been stored in fixed deposits which have not been withdrawn 10 years from the date of maturity. So maturity is when your fixed deposit basically comes to an end. After that, if 10 years have passed away and you have still not withdrawn that, that will be called as unclaimed deposit. This is also something that you can check out from this particular Udgam portal. Next, news number 90, surety bonds. What are surety bonds? The idea is simple. Bonds are money raising instruments. If a company, an organization, the government needs some money from the market, they take the money, in return they give them a bond. Bond will be kind of an instrument, a piece of paper where they will write, I have taken 1 lakh rupees from you and I will return 1,10,000 in the future. Now the question is, what if the company is not able to return the money to you? It might happen. You gave 10 lakh rupees to a company hoping that you will get 10% rate of interest on that bond. But then the company goes bankrupt, your money is gone. Now what do you do? To resolve this issue, the concept of surety bond comes into picture. So surety bond basically means a bond that will have a kind of an insurance. So an insurance company basically will back this bond. So if you bought a bond of a company is not able to repay the money to you, you go to that insurance company, they will then pay the money. So you have a short guarantee that your money will be given to you. That is called the surety bond. So if the principal violates the bond terms, the harmed party, that is you, can claim the bond to recover losses. It is a concept that is widely available around the world. In the global market, in the Western economies, bonds are usually assured like these with insurance companies, and this market is valued at $29.5 billion. In India, usually when you buy these bonds, it is a bank that usually takes a guarantee. So in most cases, the banks basically put the guarantee that okay, we will give back the money if the organization is not able to pay you back. But the bank, in order to take that guarantee, charges a lot of money. So the margin of this organization to work with the money gets reduced because they are raising money from the bonds. They have to give a lot of money to the banks for their bank guarantee. So in order to reduce the burden of the banks and to reduce the burden of these organizations who don't necessarily have to go to banks, these surety bonds have come into the picture. It was in budget of 2022-23 that the use of surety bonds in the government procurements was allowed by the government of India as an alternative to bank guarantees. The NHAI is promoting the use of these bonds to raise money for their expensive projects in the coming years. IRDI, that is the Regulatory Authority for Insurance Companies in India, they have also outlined norms about how the surety bonds will be issued in India. As we discussed, the need for surety bonds is simple. Number one, to have an alternate mechanism, not just depend upon the banks to give you guarantees, have insurance companies also come into this sector and also allow more money into the hands of the companies rather than paying a huge amount of money to those banks. These are the advantages of these surety bonds. That is, the lower cost involved will allow the companies building the project to invest more money in the project. They will reduce the initial cost of the project. Because India is an emerging construction market, we have a lot of money going into capital projects. That is why it's important in India, especially for these companies, to have more money into their hands. Moving ahead, we have news number 91. The government of India in October conferred the Navratna status on multiple companies such as Rights Limited and IRCON. Both of these are government railway related companies. Both of these have been given the Navratna status. Now, as you know, the government of India categorizes its undertakings into different categories. There are different status that are given to them. The biggest one is Maharatna, then there is Navratna, and then there is a Mini Ratna. These are the three categories. Now, I'll also tell you what is the eligibility criteria. Starting with Navratna, because this is in the news. So basically, in order to become a Navratna company, you either have to be a Mini Ratna category 1 already, or you have to be a Schedule 1 central public sector enterprise. You should have got an excellent or very good rating in the last 3 out of the 5 years. You should have had a score of 60 or above in 6 performance indicators, which include net profit, worth, cost of service, earning per share, etc. The highest category is the Maharatna, like ONGC, etc. In order to become a Maharatna, the company already should be a Navratna, should be listed on the Indian Stock Exchange, and should have an annual turnover of at least 25,000 crore in the last 3 years, average annual worth of 15,000 crore or more in the last 3 years, average annual profit after tax, that is PAT, of 5,000 crore or more in the last 3 years, and also have significant global presence as well. So this is the highest category, Maharatna, then comes Navratna, and the third one is Mini Ratna. Mini Ratna are in 2 categories, category 1 and category 2. Category 1 is should have made a profit in last 3 years, should have been profit making, pre-tax profit of 30 crores or more in at least one of the years in last 3, and positive net worth status. If you want to get into Navratna category 2, made profit continuously for last 3 years, net worth status, not defaulted in repayment of any loan due to the government especially, and not dependent on any budgetary support or government guarantees. So once the company is self-sustainable, they don't need any government support, they don't need any money from the government. These are the criteria following which you will be able to become a Mini Ratna category 2. For government, obviously, the companies such as the Maharatnas are extremely important because they earn thousands of crores in profit every single year for the government, so they're extremely valuable. These are the companies. Obviously, not all the government companies will come into these categories. They have to fulfill these criteria in order to come into these categories. For the examination point of view, try and remember all. If you can't, at least remember the Navratna one, because Navratna one was in the news. Next, the Government of India in January this year launched One Nation, One Pass transit for forest produce. So, transportation of stuff by roads in India is difficult. And it's not just about the quality of roads and quality of highways. It is also about the fact that whenever a truck passes from one state to the other state, at the state borders, there's a lot of checking, there is harassment by the forces, and the truck drivers also complain that they are not allowed to go even though they have the paperwork, etc. Especially when they are carrying forest produce, timber, etc. There are allegations put on them that you may be running away or you may be stealing something. So in order to make it easier to transport forest produce mainly from one place to the other place, rather than taking state-wise permission, right now the process is something dependent upon the states. So rather than taking state-wise permission, the idea is to get one single NOC, that is no objection certificate, for the entire country, so that you can transport forest produce across the entire country through this one single permit. How can you get this permit? There's an online web portal and a mobile application as well, where you can fill in the application. It is called National Transit Pass System, NTPS. Again, please remember, this is specifically for forest produce to transit across the entire country. It will give you a QR code based permit which can be scanned by the forest departments in any state of the country. So whichever state, let's say you are entering Gujarat from Maharashtra, at the border of Gujarat and Maharashtra, the Gujarat Forest Department can scan it, they can scan the QR code, they'll get to know that yes, this is a valid permit and they will allow you to go ahead. This will streamline the transit process for forest produce, especially timber, bamboo, minor forest produce also. Again, allowing it to happen by mobile app is a perfect example of e-governance, which you can also quote in the mains examination. E-governance, ease of doing business, all of these will be impacted positively by such efforts of the government. So do remember, National Transit Pass System. Next news, number 93, the Urea Gold. Now, as you know, the Government of India offers a huge urea subsidy to our farmers, which has led to misuse of urea, which the government has tried to stop by multiple methods. We used to have the neem coated urea for some time to ensure that urea is not diverted to some other industries. Neem coated urea did work well, but not that great, not that effective. So now another option has been launched, another alternative has been launched called the Urea Gold. What is Urea Gold? So urea is not covered in gold, urea is rather covered in sulfur. That is the idea of Urea Gold. So it's a new variety of urea coated with sulfur. What will it do? Most of the soil in India lacks sulfur, so it will, number one, provide sulfur, and it will reduce the chances of urea being diverted to the other industries. It is created by infusing sulfur with a composite fertilizer having 37% nitrogen and 17% of sulfur. Normal urea contains 46% for a single plant nutrient. It will have a slow release of nitrogen and will ensure good quality soil that is important for cultivation across the country. Also, the government has decided to give subsidy here as well. Although the government has reduced the packaging size of this gold urea, but they have not increased the prices significantly. 15 kg of urea gold is comparable to 20 kg of conventional urea. So not just the urea will be impactful or positively impact your soil, but it would also reduce the quantity that is required. It will enrich the soil with sulfur, more economic, more efficient than neem coated urea, reduces the input cost of the farmers, and it will be a part of urea subsidy which the government keeps on extending, which has been extended till 2025 at least. Next news, 94. The government last year established the National Turmeric Board. I'm sure all of you would have had turmeric in your food or with the milk. Your moms would obviously have given you milk infused with turmeric at some point of time. India is the largest producer and exporter of turmeric. The Government of India, in order to give a further push to turmeric export and market in India, they have decided to set up National Turmeric Board. Now, it's interesting why it was set up. It was related to elections also. As you know, recently there were elections in Telangana, and Telangana is one of the largest producer of turmeric. They have a significant turmeric farmer population. So when the government came out with this idea, it was said to be, or many people say it's an election ploy. But for us, for the examination point of view, that does not matter. What matters is that this board has been established. It aims to create awareness, increase consumption, carry out research and development about turmeric, spread knowledge about turmeric, how it can be an antiseptic, how it can be used across the entire country and the world for a lot of different benefits. It will also ensure high quality turmeric, which is good for export as well. This board will be headed by the chairperson, who will be nominated by the central government. It will have representatives from multiple ministries like Ministry of Ayush, Department of Pharmaceuticals, Agriculture and Farmer Welfare, Ministry of Commerce and Industry, and top state officials from 3 states on rotation basis will also be a part of it. It will also have a secretary from the Department of Commerce, and Ministry of Commerce will be the nodal department for giving it funds and providing the infrastructure required for this particular board. Now, this turmeric plant is from the family of ginger. If you have seen raw turmeric, not the powdered form, you will see it looks very similar to ginger. So it belongs to the same family. For its cultivation, it requires red, loamy soil in wet and garden lands. Also, it can be grown in regions which have rainfall of about. India's turmeric production is the largest in the world. Not just this, we also consume the most turmeric, and we are also largest exporters of turmeric. About 30 varieties of turmeric are grown in over 20 states in India. Largest producers, Maharashtra, Telangana, Karnataka. As I told you, it was nearby the Telangana election that the government came up with this particular initiative. India has about 62% share in the world trade in turmeric. Again, these are kind of products which need to be, or for which the people need to be educated. Once the people are educated now about its benefits, people will automatically start buying it, and there will be a market around the entire world. So these kind of products need some education, and once it is done, Indian products can be sold at a much larger numbers. Last news of the day, again a very interesting commodity, gum arabic. What exactly is this? So gum arabic basically comes in from a specific plant in the Sahel region in Africa, and it is used in multiple products, be it your food, be it adhesive, many products in art and craft also. Now the reason why it is in the news is that one of the largest producers of this, that is Sudan, has been hit by a civil war for some time, because of it the global supply of gum arabic has been disrupted. It is a natural gum which is made from the hardened sap of 2 acacia tree species. Do remember that it's mainly found in Africa. Countries such as Cameroon, Chad, Mali, Nigeria and Sudan make up 70% of the entire world's market. It's grown in India also, but in very small quantities, mainly in the rocky hills of Punjab, Aravallis and dry parts of Rajasthan and Gujarat. So it's again a gum that is taken out from a tree. It's a thick frothy liquid which forms from the tree bark cracks. It is used in multiple places. As I said, adhesive products which are used to stick something, food industry, be it your soft drinks, confectioneries, etc. In wine making, in high-end arts, it's used by artists. It's also used for lithographic paintings, pharmaceuticals, even shoe polish. All of these are places where gum arabic finds certain applications. This brings me to the end of today's class. I'll be uploading the PDF soon on the Telegram channel, so be a part of that. The link is in the description of the video. If you have not watched any of the earlier classes, please do that. The link of the entire playlist is in the description of the video again. Thank you so much. Have a good day ahead. Jai Hind.